I might be right, I might be wrong. But the point is, because it's property, it's ethical for me to say that. If I were to turn around and say, Lex, I think the same about MicroStrategy stock, MSTR. That's a security, okay? If I'm wrong about that, I have civil liability or other liability, because I could go to a board meeting tomorrow and I could actually propose we issue 1 million more shares of MicroStrategy stock. The thing that makes Bitcoin ethical for me to even promote is the knowledge that I can't change it. If I knew that I could make it 42 million instead of 21 million and I had the button back here, right? Then I have a different degree of ethical responsibility. I could tell you your life will be better if you buy Bitcoin, and it might not. You might go buy Bitcoin, you might lose the keys and be bankrupt, and your life ends, and your life is not better because you bought Bitcoin, right? But it wouldn't be my ethical liability any more than if I were to say, Lex, I think you ought to get a farm. I think you should be a farmer. I think a chicken in every pot, you should get a horse. I think you'd be better. I mean, these are all opinions expressed about property, which may or may not be right, that you may or may not agree with. But in a legal sense, if we read the law, if we understand securities law, and I would say, most people in the crypto industry, they didn't take companies public, and so they're not really focused on the securities law. They don't even know the securities law. If you focus on the securities law, that would say you just can't legally sell this stuff to the general public or promote it without a full set of continuing disclosures signed off on by a regulator. So there's a fairly bright line there with regard to securities. When you get to the secondary issue, it's how do you actually build a world based on digital property if public figures can't embrace it or endorse it? You see, so you're not going to build a better world based upon Twitter stock, if that's your idea of property, because Twitter stock is a security and Twitter stock is never going to be a non-sovereign bearer instrument in Russia, right? Or in China, right? It's not even legal in China, right? So it's not a global, permissionless, open thing. It will never be trusted by the rest of the world. And legally, it's impractical. But, would you really want to put $100 trillion worth of economic value on Twitter stock if there's a board of directors and a CEO that could just get up and take half of it tomorrow? The answer is no. So if you want to build a better world based on digital energy, you need to start with constructing a digital property. And I'm using property here in
open, permissionless,
in the legal sense. But I would also go to the next step and say property is low frequency money. So if I give you $1 million and you want to hold it for a decade, you might go buy a house with it. The house is low frequency money. You converted the $1 million of economic energy into a structure called a house. Maybe after a decade, you might convert it back into energy. You might sell the house for currency, and it'll be worth more or less depending upon the monetary climate.
The frequency means what here? How quickly it changes state?
How quickly does something vibrate? So if I transfer $10 from me to you for a drink, and then you turn around and you buy another, right? We're vibrating on a frequency of every few hours, right? The energy is changing hands. But it's not likely that you sell and buy houses every few hours, right? The frequency of a transaction in real estate is every 10 years, every 5 years. It's a much lower frequency transaction. So when you think about what's going on here, you have extremely low frequency things, which we'll call property. Then you have mid-frequency things, I'm going to call them money or currency. And then you have high frequency, and that's energy. And that's why I use the illustration of you got the building, you got the light, and you got the sound, and they're all just energy moving at different frequencies. Now, Bitcoin is magical. It is truly the innovation. It's like a singularity because it represents the first time in the history of the human race that we managed to create a digital property, properly understood. It's easy to create something digital, right? Every coupon and every skin on Fortnite and Roblox and Apple TV credits and all these things, they're all digital something, but they're securities, right? Shares of stock are securities. Whenever anybody transfer money on PayPal or Apple Pay, you're transferring in essence a security or an IOU. And so transferring a bearer instrument with final settlement in the internet domain or in cyberspace. That's a critical thing. And anybody in the crypto world can do that. All the cryptos can do that. But what they can't do, what 99% of them fail to do, is be property.
Michael Saylor explains that Bitcoin is the most secure asset to own because it's protected by private keys you can remember, unlike physical property or stocks, which can be easily altered or seized. He views Bitcoin as a unique form of ownership that is both more secure and ethical, as it is fixed and immutable. This quality makes it revolutionary in the digital realm. Now let's explore what Saylor reveals next.
The Russian payment app is not going to work in Ukraine. The Ukraine payment app is not going to work in Russia. US payment apps won't work either of those places, as far as I know. In Argentina, their payment app may not work in certain parts of Africa. So what you have is different local economies where people spin up their own applications compliant with their own local laws, or in war zones not compliant, but just spinning up,
So how do you build something that's not
way.
compliant? What is the revolutionary act here when you don't agree with the government?
So Bitcoin is a language, so you learn to speak Bitcoin or you learn to speak Lightning, and then you tap into that network in, whatever manner you can.
But the problem is it's still very difficult to move Bitcoin around in Russia and Ukraine now during war.
If you take Lightning, for example, the first real commercial applications of Lightning are just in the last 12 months.
Yeah.
So we're like year one. We might be approaching year two of commercial Lightning adoption. And if you look at Lightning adoption, Lightning's not built into Coinbase. It's not built into Binance. It's not built into FTX. Cash App just implemented the first implementation, but not all the features are built into it. There's a dozen Lightning wallets circulating out there. So I think that, we're probably going to be 36 months of software development at the point that every Android phone and every iPhone has a Bitcoin wallet or a crypto wallet in it of sorts. That's a big deal. If Apple embraced Lightning, that's a big deal.
So the adoption is the thing. Like in a war zone adoption, the people who struggle the most in war are people who weren't doing that great before the war started.
In this segment, Michael Saylor discusses why Bitcoin functions as a universal trust protocol, akin to a global language that can transcend local barriers. While he acknowledges that adoption is still in its early phases, he sees significant potential, particularly with technologies like the Lightning Network. Although widespread use may still be a few years away, let's hear his insights on Bitcoin's future potential.
I think that the volatility attracts all the capital into the marketplace. And so the volatility makes it the most interesting thing in the financial universe. It also generates massive yield and massive returns for traders, and that attracts capital. Like we're talking about the difference between 5% return and 500% return. The fast money is attracted by the volatility. The volatility has been decreasing year by year by year. I think that it's stabilizing. I don't think we'll see as much volatility in the future as we have in the past. I think that if we look at Bitcoin and model it as digital gold, the market cap goes to between 10 and 20 trillion. Remember, gold is defective property. Gold is dead money. You have $1 billion of gold that sits in a vault for a decade. It's very hard to mortgage the gold. It's also very hard to rent the gold. You can't loan the gold. No one's going to create a business with your gold. So gold doesn't generate much of a yield. So for that reason, most people wouldn't store $1 billion for a decade in gold. They would buy $1 billion of commercial real estate property. And the reason why is because I can rent it and generate a yield on it that's in excess of the maintenance cost. So if you consider digital property, that's $100 to $200 trillion addressable market. So I would think it goes from 10 trillion to 100 trillion as people start to think of it as digital property.
What does that mean in terms of price per coin?
At 500,000, right? That's a $10 trillion asset. At 5 million, that's a $100 trillion asset.
So you think it crosses $1 million, it can go even higher?
Yeah, I think it keeps going up forever. I mean, there's no reason it couldn't go to 10 million a coin, right? Because digital property isn't the highest form, right? Gold was that low frequency money. Property is a mid-frequency money, but when I start to program it faster, it starts to look like digital energy then it doesn't just replace property. Then you're starting to replace bonds. Right? It's 100 trillion in bonds. There's 50 to 100 trillion in other currency derivatives. And these are all conventional use cases, right? I think that there's 350 trillion to 500 trillion dollars worth of currency derivatives in the world. And when I say that, I mean things that are valued based upon fiat cash flows. Any commercial real estate, any bond, any sovereign debt, currency itself, any derivatives to those things, they're all derivatives, and they're all defective because of this persistent 7 to 14% lapse, which we call inflation or monetary expansion. Can we switch subjects and talk about the energy side of it, like
Sure.
the innovative piece? Let's just start with this idea that I've got a hotel worth $1 billion with 1,000 rooms. When it becomes a dematerialized hotel,
I love that word so much, by the way. Dematerialized hotel.
we're across from the Fontainebleau here. Imagine the Fontainebleau is dematerialized. The problem with the physical hotel is I got to hire real people moving subject to the speed of sound and physics laws and Newton's laws, and I can rent it to people in Miami Beach. But if it was a digital hotel, I could rent the room to people in Paris, London, and New York every night, and I can run it with robots. And as soon as I do that, I can rent it by the room hour, and I can rent it by the room minute. And so I start to chop my hotel up into 100,000 room hours that I sell to the highest bidder anywhere in the world. And you can see all of a sudden the yield, the rent, and the income of the property is dramatically increased. I can also see the maintenance cost of the property falls. I get on Moore's law, and I'm operating in cyberspace. So I got rid of Newton's laws. I got rid of all the friction and all those problems. I tapped into the benefits of cyberspace. I created a global property. I started monetizing it at different frequencies. And of course, now I can mortgage it to anybody in the world, right? I mean, you're not going to be able to get a mortgage on a Turkish building from someone, in South Africa. You have to find someone that's local to the culture you're in. So when you start to move from analog property to digital property, it's not just a little bit better, it's a lot better. And what I just described, Lex, is like the DeFi vision, right? It's the beauty of DeFi, flash loans, money moving at high velocity. At some point, if the hotel is dematerialized, then what's the difference between renting a hotel room and loaning a block of stock, right? I'm just finding the highest, best use of the thing.
It feels like the magic really emerges, though, when you build a market of layer 2 and layer 3 technologies on top of that.
And the best terms. Because ultimately, you have to jump these compliance hoops. Like BlockFi can give you yield, but they have to do it in a compliant way with the United States jurisdiction. So ultimately, those applications to use that digital property and either generate a loan, give you a loan on it, or give you yield on it are going to come from companies. The fundamental difference is it could be companies anywhere in the world. So if a company in Singapore comes up with a better offering, right, then the capital is going to start to flow to Singapore. I can't send 10 city blocks of LA to Singapore to rent during a festival, but I can send 10 blocks of Bitcoin to Singapore. So you've got a truly global market that's functioning in this asset, and is there a second order asset? For example, maybe you're an American citizen and you own 10 Bitcoin, and someone in Singapore will generate 27% yield in the Bitcoin, but legally you can't send the money to them or the Bitcoin to them. It doesn't matter, because the fact that that exists means that someone in Hong Kong will borrow the 10 Bitcoin from somebody in New York, and then they will put on the trade in Singapore, and that will create a demand for Bitcoin, which will drive up the price of Bitcoin, which will result in an effective tax-free yield for the person in the US that's not even in the jurisdiction. So there's nothing that's going on in Singapore to drive up the price of your land in LA. But there is something going on everywhere in the world to drive up the price of property in cyberspace if there's only one digital Manhattan. And so there's a dynamic there which is profound because it's global. But now let's go to the next extreme. I'm still giving you a fairly conventional idea.
Hello guys, how are you? I think all of guys are okay. I am also okay. Today I am back with another new video. In this video, Michael Saylor has discussed about Bitcoin and its potential. He has discussed about US
Marked a
economy,
location.
stock market, Bitcoin, and especially money. He predicts the future of Bitcoin and the potential of future Bitcoin. So guys, if you like crypto or Bitcoin related content, then you can subscribe my channel and watch every video in this channel. Now he discussed about Bitcoin, and basically I upload a part of interview like investor like Ralph or Michael Saylor or, or something else. So guys, if you are really like Bitcoin related content, then you can subscribe my channel because I daily upload this type of content. Now I am playing a game which name is PGMI, and I am playing this game with my teammates which are random. No one is my in this game. I don't get any gun still. Let watch can I find any gun or not. But still I don't find any gun. Finally I got a gun from here. I think my ping is too high because gun is not tagging easily. Everyone gets shotgun, I think, because this game is shot shotgun shotgunable game, I think.
Help!
Someone has shot on me and trying to finish me, and finally he finished me. Keep watching guys, I will be with new video because I love to share Bitcoin related content. If we are Bitcoin investor,
Enemies
then you
ahead!
should subscribe my channel because I daily inform about market and market analyzers interview. So guys, keep watching. I will back with another video next. Bye for now. Thank you once again.